All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Market's been going here for about 2.5 hours, and it's kind of just been the same old. Here with the market, we got a little bit of sell at the open, but nothing too serious. And when you looked at what was selling, it just wasn't all that serious. And then that next wave of kind of forced buying coming in, and pushing things up, and it's kind of that same old story. One change, we do have the dollar down here today. Dollar is actually trading a little bit lower. That's been unusual, but we do see the bond market tracking lower. TLT pushing on down here with it. I was asked earlier this morning about the VIX, and if the VIX not selling off further here is a bad sign, or is a sign that of something to come. And bottom line, I don't read anything into the VIX. Absolutely nothing do I read into the VIX. You look at it, it's just the inversion of the S&P with a few, blips here and there. That's all it is. And, I know some people look at the VIX as a predictive measure. I've never found anything where the VIX predicts what's going to happen in the market. We can look at periods where the VIX is just really low. And so what do you expect when the VIX is really low? You expect the market not to move all that much. And when the VIX is high, you expect the market to move a lot more. But, VIX here at 13, okay, fine. That doesn't stop it from going to 12, doesn't stop it from going to 11, doesn't stop it from breaking 11 or going even lower there. But it is at a new low, or close to a new low for the year. As it is shaking off this one little bounce that it had, here with the market. And let's face it, this bounce was pretty big. That was a pretty big shot up, and no follow through to it, right? No real follow through. So I don't really read too much, into it. And in terms of the overall market and kind of my thoughts on the overall market, there's no change from anything I said yesterday, today, or Monday. It is one where, look, we could jump on and I could talk about how bonds are hitting new highs with stocks in the same month, right? And what that historically looks like, because historically, that leads to a lot of selling. We could talk about small cap underperformance. We could talk about earnings trends. We could talk about economic trends and dips. And we could make, a very bearish case, and we could show how when these things have happened before, it has been very, very ugly out there. But the reality of the situation right now is the market is in that runaway mode, right? Some will call it irrational. Some will say, hey, you know what? This doesn't make any sense. It's irrational because of this, that, and the other. But when we go into kind of an irrational exuberance phase in the market, generally that is highly correlated with a lot of what's the right word here? A lot of rationale, kind of rationalizing different things. Well, you know what? It's okay this time. This time it's different because of this, and this time it's different because of that. We see a lot of that out there. You don't have to go too far on the market news pages and whatnot to see any of that. But the reality is, when does that end? That's a little bit different, right? And we talked about April of 2010. This feels very much like April 2010 in a lot of ways to me. That kind of March-April period, especially with some of my frustration level on signals and market metrics, just not really playing out. So it's very similar there. It does have some themes to September, October 2007, where we saw some of that, irrational exuberance come in where the Fed is now going to save the day, and yes, earnings are, we're hearing about earnings topping, and economic data starting to no longer grow and starting to contract a little, but it's okay because you know what, we already had that period, and now the Fed's in our corner. And we have a market right now with just some magic pills, and it is using them, and the total just complete anomaly of what the first quarter was here in the market in terms of the performance of the S&P in the first quarter, just an absolute anomaly, is forcing fund managers in, and it has rewarded the chasers, and chasers that are rewarded continue to chase. In the same way as gamblers in Vegas. You're rewarded at the table. Do they get up and go? No, they keep going until they lose. And do we see that come in? Yeah, we do. When will it end? You know what? So far, there's no sign. So far, we've seen some signs come in here and there. But, it's not something where I think staring at the chart each and every minute and going, well, is that a sign? Is that a sign? I'm not going to do a whole lot. I think it's going to be a pretty obvious sign. Most times when we do see a top out, there's some sort of heavy reversal, where the market's up on really good news and just gets sold off, not on bad news, but on good news. And, we're probably in for that. But as I mentioned this morning, just looking at everything, it's probably not happening until the market prints a new high. This market just absolutely looks like the S&P wants to print a new high. And, when we get close to these types of levels, they tend to get hit. With all that in mind, let's go take a look at some of the trade setups, that are out there. And let's start off with my least favorite, but one I think is worth keeping an eye on. Philip Morris. Philip Morris Tobacco Company, very, very big first quarter, big ups here, and reversed into the end of the month last quarter, and or last month, broke the 7-day moving average off of the reversal, has had a nice little rebound, and breaking back below the 7-day moving average here. This is very toppy type action overall. Now, it had the same type of action right back here. Right back here. And one of the reasons it's not my favorite setup is I think in the short run, the reward potential is not all that great because you're probably going to see some support come in around this lower Bollinger Band, especially considering market conditions. So, if you take a look at that support level and go, okay, you know what, it's probably not worth, chunking into right here, but it has given some kind of negative signs here. What would you look for? Well, you look for the bounce off of this level, and then you look for a reversal off of that bounce. And that's it. It's that simple. Just something like right here, where we get a bounce off the lower band, and then we get this kind of reversal. Or here we get another bounce, and then we get a reversal. Especially when it comes to how Philip Morris or Altria trade, it's very common for them to have this type of action or this type of bounce and reverse type action. So, one that I don't look and say, hey, this is great setup right here, but one that I think the action has kind of said, hey, you know what, ultimately there's a retracement here. And, we'll have some sort of kind of bounce and drop come into it. But that's my least favorite. And it's not something I think is worth, really pricing out on the day today. Yeah, could you, catch a little bit lower? I do think you could. I think you can catch about another $1, even $1.50 lower on it in the short run. But, again, not my favorite. One of my favorites, Raytheon. Now, I would not be looking to buy this until the close. And it's something where I would not be surprised if the stock rallied into the close. And if it does, you just kind of wait for that 7-hour moving average to break. But when we go out, and I promise they're not all going to be bearish setups. When we go out and we look at, stocks that broke out on Monday, Raytheon, Home Depot, Adobe, Microsoft. You just look at this whole slew of stocks, hundreds in the S&P that broke out on Monday on the Monday gap. There's not a lot that are giving that up. There are very few that are just kind of giving that up and rolling over. Raytheon is one of the few. And in fact, today's action is erasing 3 days worth of upside action. And you can see the volume so far today. It's going to be on big volume. This is a big move here for Raytheon. Now, it's coming on a downgrade. A downgrade basically to neutral, saying, look, the valuation on Raytheon's not compelling anymore. And they're absolutely right. It's not very compelling. It's a rich valuation. It's price action that, broke above the 200-day moving average, now snapping below. Okay, whoop-de-doo. It doesn't mean a heck of a whole lot. But when you look at the entire industry, Raytheon, Lockheed Martin, Northrop Grumman, they're all doing the same thing. And you'll notice that most of them are doing it off of a lower high. Something like Northrop Grumman, we're talking about the S&P pretty much ready to print a new high. And Northrop Grumman's not even close to their highs. They're not back to where they were in September, not back to where they were in June. They're not even back to where they were in February. And so we have this divergence here with the market, these fresh moves below the 7, that are happening and that are setting up right here. Now, I say wait until the close. Why? Well, chances are if it closes near its lows, it's going down again tomorrow. If it rallies into the close, right, because the hourly chart's a little bit oversold, right, rallies into the close, you just wait for that next breakdown below the 7-hour moving average. But, Raytheon, my favorite, in here. I don't think it's worth shorting just yet. Let it rally into the close or see what happens here into the close today. But the action that it has had today suggests further down. It's very similar action to right back here. Beginning of March, sells off. And you can see kind of what happens. When I say, hey, don't short it right here, let one of these little bounces kind of come in. This kind of $1.50, even $2 bounce come in, and look for that as your opportunity to short it before kind of these lows get retested. And that's what I expect that we will see, that we will see these lows ultimately retested here when it comes to Raytheon. Now, I promise you they weren't all bearish. All right. Take a look at BIDU. This has been a big laggard. Right? I mean, it's nowhere close to its highs. And it has lagged. It has lagged the sector. It has lagged China. It has lagged, every metric you can think of. But while it's lagged here this year, it's been building a base. It's been building its own base, and a high volume base at that. And, we've seen it sold off aggressively in January, in February, a little less aggressively here in March. But it has had no follow-through to some of that aggressive selling. We saw BIDU on Monday, gap above the 7-day moving average and push up on the day with good volume, with really just nice volume in it. And you can see what's happening right now. Bollinger Bands are tight, and they're starting to expand. And we have the stock piercing the upper Bollinger Band, and we have fantastic volume. We also have our little voodoo technicals coming off the 20 on the stochastics, which is always a bullish sign. And with this basing process, we have some nice positive divergence in a lot of the momentum oscillators like the MACD. There's a lot to like about this chart if you're looking at it just kind of in a vacuum. It just has this kind of breakout element on volume going on, and in a stock that, let's face it, it's BIDU. BIDU, $5 above the 7-day moving average isn't exactly a whole lot. This is a stock, when it moves, it can take off 20, 30, 50-point chunks and, keep on ticking. If we back this out to a weekly chart here with BIDU, you can also see that this week is pushing it back above the 7-week moving average. And for the first time since back here in the first half of last year, the stochastics on the weekly chart of BIDU is pushing above 50. That's generally a pretty darn bullish sign that there's going to be follow through to the rebound, to the rally. None of the metrics are overbought, and we're talking about a stock that is kind of giving itself a fresh little breakout, here right now. Just right now this week. What's really interesting is if you look at something like an Alibaba who has performed better this year, Baidu's breaking out while Alibaba is actually pulling on back a little bit. I find that to be really interesting. Why? Because it suggests rotation. And then that leader starts lagging while the laggards lead. And they pass this baton. JD, Alibaba, they've been two of the best performers this year in that space. But we see the baton starting to get passed to the Baidus of the world. If you look at something like a Sina, to a lesser degree, but, you see the nice volume, the pierce of the upper band. You take a look at something like a Sohu. This has been a big laggard, but also kind of has this basing. I think if you want to be more aggressive in this space, Sohu's interesting. But I think Baidu has a lot more upside potential to it. But especially if you think a trade deal is going to happen and, you think there's just going to be kind of this relief exhale in the market. When that happens, Baidu could be one of the setup. As far as risk reward, I think this is something you're looking for the 190 to 195 level to come into play. And it's not something that you go buy a weekly option on, but you look at some sort of call spread that takes you out to the 190, 195, 200, and you look and you use this 170 level and say, hey, you know what? As long as it holds 170, I'll run with this. So you have about $15 to $25 to upside for about $6 to $7 of downside, which is a nice little kind of risk-reward measure there with it. But one of the better setups when we look at daily, weekly charts, volume, breakout, that's going on right now out there in the market today. So that's Baidu. If we go to Target, this one to me is much more of a short-term setup. If you're bearish and you're saying, you know what, I want a short-term setup that I can take advantage of, here's Target. Here, take a look at the stochastics. Stochastics is breaking into a 1-month low. When that happens, there's generally a little follow-through to the downside, right? When we see the stochastics kind of, pushing and holding a level, when that level breaks, there tend to be continued selling afterwards. And so we see that level breaking. We saw the 7-day moving average get broken yesterday. The market's rallying today. Target's not really able to rally. The short-term stop is yesterday's high. If that breaks, you got to go. But if you're looking for a short-term downside action and something where the MACD is turning negative, stochastic's turning negative, it's had a nice run. It's come up into kind of a little bit of a short-term resistance area. There's some option action that suggests this stock's going to have a hard time breaking above 80. It's one that, to see some sort of pullback back to this 77, even 76 or lower Bollinger Band would be some normalized type of action. And you can get in on that action without a huge risk component using the high from yesterday here with Target. So, one of my favorite kind of short-term kind of downside plays where, if you want to just kind of put a little bit to make a lot of it, if it materializes and not take a heck of a lot of risk there for, what can be a whole lot of reward, Target's a very interesting setup. You'll also notice the market's been up every day this week. Target's been down every day this week. I know it's up today, 13 cents. But there's definitely been diverging from the market there. Now, the last setup here, Newmont Mining. And I think you could use Goldcorp, GG, or Newmont Mining. Right. And we've talked about these miners. We've talked about the gold market. You know where I stand with that. Gold has finally had a pullback, and it's pulled on back. I mentioned back on this big gap down, I stepped in. I said I'm buying about a 20% position. I haven't added to it. I haven't increased it. I haven't, said, oh, now it's time to go to 40 or 60 or anything like that yet. It's still, I'm not getting any kind of signs that it's ready to move, to the upside. But take a look at this pullback in gold, 125 down to 121.5, right? It's been a nice little pullback in gold. The gold miners, the GDX, it's also pulled on back, as you would expect, right? But you take a look at Goldcorp, and you take a look at Newmont Mining, they have not pulled back. They have weathered this pullback in gold very well. Why? Well, because there's merger action going on between these two companies. And this is where I look and I say, you know what, if you're looking for that opportunity where you could wake up in the morning and your options up 400, 500%, take a look at Goldcorp and Newmont Mining. They're both outperforming. They're both outperforming gold. They're both outperforming the gold miners. They have a very positive catalyst that's still in the works. They've had a nice little consolidation, and both are starting to break out of this consolidation. They've had big volume here to the upside, which suggests further upside momentum to come. And, this is also one that you could wake up and it could be gapping down $4, right? So, if you're setting up an option position, keep that in mind. I don't think the risk is very high of that. When you look at whether or not the deal is going to go through, it really looks like it's going through. But, that could always, something could always fall apart. But, I think the odds are much greater that the deal happens. We're talking about Newmont Mining in the $38, $39, even $40 area after that. Even though, much of it's already kind of, being priced in, here to it. So outperforming gold, it's one that if gold rallies, it's going to rally. Gold has lagged, and it has managed to hold on very nicely. So one of my favorite upside plays out there in the market today, Newmont Mining. So BIDU, Newmont Mining here to the upside. Raytheon, Target, both with some nice downside action signals today. And then Philip Morris, one to keep an eye on. And we'll talk about it. We'll kind of see how it evolves. And I'll continue to talk about it when we see that kind of bounce reversal. Then we'll go out and take a closer look at it here. Now, I'm not in any one of these positions personally just yet. I will be looking to get into them here into the close, and I likely will be looking at something like a Target for just a little short-term play, and then a Newmont Mining because I like it fundamentally the best. And I'll probably set those two up personally, and then I'll be looking at BIDU and kind of saying, all right, you know what, can I buy this on a pullback? Yeah, it's breaking out, has everything I want for a breakout, and you know what, it could just chunk on higher and, leave me in the dust. But if you look at BIDU breakouts, historically, and I know we don't see any on this chart, but if you look at BIDU breakouts historically, they tend to have a buy-in type of day or two where they just kind of pull back just a little bit and give you an opportunity to get in. But we'll see. We'll see when it comes to that and how that evolves here. Okay, so anyway, those are some of my favorite setups on the board out there right now, and where they stand. I still think the market is in a interesting spot, in a very interesting spot. One that if it reverses, it could get ugly very, very quickly. But the rationale, the reasonings, just the incentives for the market right now continue to be to that upside, and until we see some sort of mass type reversal, the overall you overall have to look at it and say, hey, bulls are in charge. And until some of the lows from the prior day start to break, like what we saw with Target or what we see happening with Raytheon, those individual stories. But until that happens with the market, path of least resistance is still most likely here to the upside. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.